What is up, beautiful people, and welcome back to Boni's Life. It's your host, Boni, and today we are diving deep, and I mean deep, into the question that's on every investor's mind. What is the true and fair value of Bitcoin? Forget the daily noise, the crazy headlines, and your cousin who suddenly became a crypto expert overnight. We're going to cut through all of it with a data-driven analysis to figure out where Bitcoin should be priced right now and where it could be heading. We'll look at the bear case, the bull case, and most importantly, how you can use this knowledge to inform your trading strategy. Ready? Let's get into it. First, let's get a snapshot of the current market climate as of today, February 23rd, 2026. Right now, the market is painting a pretty clear picture of fear and uncertainty. The Crypto Fear and Greed Index, a key sentiment indicator, is currently sitting at a value of 6, which is deep in the territory of extreme fear. This tells us that investors are incredibly nervous, which often happens during steep price corrections and can sometimes present a buying opportunity for those with a long-term perspective. It's the classic Warren Buffett saying, right? Be fearful when others are greedy, and greedy when others are fearful. But is now the time to be greedy? Let's look at the numbers. Bitcoin is currently trading at approximately $66,300. Over the last 24 hours, we've seen a slight dip of about 2%. But the bigger story is the monthly performance, where we're down nearly 26%. This confirms the bearish sentiment we're seeing in the Fear and Greed Index. The total crypto market cap is hovering around $2.35 trillion, with Bitcoin's dominance holding strong at over 56%. This means that even with the price drop, Bitcoin is still firmly in the driver's seat of the entire crypto market. The derivatives market gives us more clues. We're seeing a total of about $500 million in liquidations over the last 24 hours. That's a massive amount of forced selling, which has definitely contributed to the downward price pressure. The overall open interest in Bitcoin futures is sitting at a hefty $45 billion, and the long/short ratio is nearly split down the middle, at 49% long to 51% short. This indicates that the market is completely divided on where the price is headed next. It's a tug of war between the bulls and the bears, and right now, the bears have a slight edge. Now, let's talk about the big players, the ETFs. Since their launch, the spot Bitcoin ETFs have been a game changer, and their flows are a critical indicator of institutional sentiment. Cumulatively, they've seen a massive net inflow of over $54 billion. However, looking at the recent data, the trend has shifted. Over the past week, we've seen consistent outflows totaling over 10,000 BTC. For example, on February 12th alone, there was a staggering net outflow of over 6,100 BTC. This is a significant signal that institutional buying pressure has cooled off, at least for the moment, and is a major factor in the current price correction. So, with the market in a state of extreme fear, the price down significantly from its all-time high of over $126,000, and institutional ETF flows turning negative, the obvious question is Bitcoin overpriced, or is this a massive discount? To answer that, we need to move beyond the daily charts and establish a fundamental valuation. And that's exactly what we're going to do, using a framework built on multiple proven valuation models. To figure out Bitcoin's true value, we can't just use one method. We need a composite approach. Like building a financial Swiss Army knife, we're going to blend 6 different models to get a robust and reliable valuation range. These are the same types of models that institutional analysts at firms like RK Invest and Fidelity are using. We'll look at its scarcity, its network value, the cost to produce it, and key on-chain metrics. First up is the famous stock-to-flow model. This model values Bitcoin based on its scarcity, just like gold or silver. It compares the total existing supply, the stock, to the new supply created each year, the flow. With the latest halving in 2024, Bitcoin's annual inflation rate dropped below 1%, making it programmatically scarcer than gold. While this model has its critics because it doesn't directly account for demand, our analysis uses an adjusted version that gives us a fair value estimate of $85,000 in a base case scenario. Next, we have Metcalfe's law, which is all about network effects. It states that a network's value is proportional to the square of its users. For Bitcoin, we look at the growth in active addresses and on-chain activity. The more people who use and transact on the Bitcoin network, the more valuable it becomes. It's the same reason Facebook or your phone is valuable, because everyone else is on it. This model points to a base case valuation of around $78,000. Our third model is the cost of production. This one is simple, and provides a fundamental price floor. It looks at the cost of electricity, hardware, and operations for miners. Rational miners won't sell their Bitcoin for less than it costs to create it. Right now, the average production cost for a single Bitcoin is estimated to be around $72,000 for an efficient mining operation. This acts as a strong psychological and economic support level for the price. Fourth, we dive into on-chain metrics, specifically the MVRV and NVT ratios. Think of these as the crypto world's equivalent of a P/E ratio. The MVRV ratio compares the market value to the realized value, what everyone actually paid for their coins. The NVT ratio compares the network value to the transaction volume. Together, they tell us if the price is overheated or if it's undervalued relative to its actual use. These on-chain signals currently point to a fair value in the $80,000 to $82,000 range. Finally, we look at the total addressable market, or TAM. This approach values Bitcoin by estimating its potential to capture a share of other major markets, most notably gold, which is currently an $18 trillion market. If Bitcoin as digital gold were to capture just 10% of gold's market cap, its price would be around $95,000. This model helps us frame Bitcoin's long-term potential. When we blend all these models together, giving more weight to the more reliable ones like production cost and on-chain metrics, we arrive at a composite weighted fair value for Bitcoin. So after running all the numbers, blending 6 different models and weighing them based on their historical accuracy, what is the final verdict? Our comprehensive analysis points to a composite fair value, or a base case scenario, for Bitcoin of approximately $82,000. With the price currently sitting around $66,300, this suggests that Bitcoin is trading at a significant 19% discount to its fundamental value. This isn't just a guess. It's a data-driven conclusion based on a synthesis of scarcity, network effects, production cost, and on-chain utility. But of course, the market isn't always rational. So we also need to define a range for different scenarios. In a normalized bear market, let's say if ETF outflows continue and we get some negative regulatory news, our models point to a fair value floor of around $46,000. This level is strongly supported by the lower bands of our on-chain models and the cost of production for less efficient miners. It represents a scenario of sustained negative sentiment but not a complete market collapse. On the flip side, what about a normalized bull market? If the macroeconomic environment improves, if the Fed starts cutting rates, and if institutional ETF inflows pick back up with force, our models indicate a fair value of $147,000. This isn't even the euphoric blow-off top price. This is a fair valuation in a strong, fundamentally driven bull market. It represents an expansion of valuation multiples towards the upper end of their historical range, driven by accelerating adoption. Okay, this is the part you've been waiting for. We have our valuation range, a bear case floor at $46,000, a fair value base case at $82,000, and a bull case at $147,000. How do we turn this analysis into actionable trading strategies? Let's break it down for 3 different types of traders: the long-term investor, the swing trader, and the conservative, low-risk accumulator. First, for the long-term investor or hodler, your strategy is the simplest and, historically, the most effective. You see the current price of $66,300 as a discount to the fair value of $82,000. Your plan is to accumulate in this zone. You're not trying to time the exact bottom. A potential trade setup is to establish a significant position here and set buy orders in increments all the way down to the normalized bear case floor of $46,000. Your thesis is that institutional adoption and the supply shock from the halving will inevitably drive the price back to and above its fair value over a 12 to 18-month horizon. Your stop loss is more conceptual, a fundamental breakdown of the Bitcoin thesis, not a price point. Next, for the swing trader, you're looking to capitalize on the volatility within our established range. You see the current price as a potential bounce zone, but you're also wary of the bearish momentum. A viable strategy is to wait for a clear sign of a bottoming formation on the daily or weekly chart. Perhaps a double bottom, an inverse head and shoulders, or a bullish divergence on the RSI. You could enter a long position upon confirmation, with a target of the fair value at $82,000. Your stop loss would be placed tightly below the recent swing low, perhaps around $64,000. Conversely, if the price breaks below this support, you could flip short, targeting the $46,000 bear case floor. Finally, for the conservative accumulator, you want to buy Bitcoin, but you're risk averse and want the best possible entry. Your strategy is dollar cost averaging, DCA, but with a twist. Instead of buying on a fixed schedule, you use our valuation models to guide your buys. You would set up a DCA plan to buy a fixed dollar amount weekly or monthly, but you would double your buy amount anytime the price is trading below the cost of production, which is currently around $72,000, and triple it if the price ever approaches the normalized bear case of $46,000. This method ensures you are accumulating most aggressively when the asset is most undervalued according to our fundamental analysis. So there you have it, a comprehensive data-driven look at Bitcoin's true and fair value. The market is telling us it's scared, but the fundamental models suggest the price is at a discount. Whether you're a long-term believer, a nimble swing trader, or a cautious accumulator, this framework gives you a logical foundation to build your strategy. Don't let the fear get to you. Let the data guide you. As always, this is not financial advice, so do your own research. Thanks for tuning in to Boni's Life. Stay smart, stay safe, and I'll see you in the next one.